AMD just secured one of its strongest AI infrastructure endorsements yet, but the headline comes with a $5 billion twist. Anthropic plans to deploy up to 2 gigawatts of AMD systems, while AMD has committed to make a future strategic equity investment of up to $5 billion in Anthropic. That does not erase Anthropic's stated need for compute, and it does not mean AMD is paying directly for Anthropic's purchases. It means this deal can be strategically real while the economic signal is less independent than the headline first appears. The hardware commitment is substantial. AMD says Anthropic plans to use its Helios rack-scale systems, including MI455X GPUs from the MI450 series, EPYC Venice CPUs, Pensando networking, and ROCm software. Deployment of the first gigawatt is expected to begin in the first half of 2027, and the companies also announced a multi-year engineering collaboration. Anthropic already uses AMD's earlier MI355X GPUs, so this is an expansion of an existing technical relationship, not a cold start promise. For AMD investors, that matters because a frontier AI company is putting AMD deeper into its future compute stack. Reuters reported that AMD shares rose 2.4% after the announcement, reflecting the market's immediate enthusiasm. But a stock reaction measures surprise and expectations, not the eventual economics of the contract. The real question is whether this commitment becomes profitable revenue and cash flow at scale. Here is the mechanism behind the tension. Anthropic's planned deployments could create a major revenue stream for AMD, while AMD's future equity investment gives it exposure to Anthropic's growth and aligns the two companies more closely. Reuters reported that the investment is tied to deployment milestones, which makes the capital relationship relevant when judging demand quality. However, the public disclosures do not prove that AMD's investment directly finances the hardware purchases, so any stronger causal conclusion would outrun the evidence. The wording also matters. Up to 2 gigawatts is a future ceiling, not capacity already installed, and the first deployment does not begin until 2027. AMD has not publicly disclosed the contract's pricing, payment schedule, margins, revenue recognition timing, or detailed investment milestones. Investors therefore have product validation and strategic intent today, but not enough information to calculate the deal's economic return. Gigawatts are the surface. Revenue quality and cash conversion are the message. Confirmation will arrive in stages. First, the initial gigawatt needs to begin deployment on schedule in the first half of 2027. Next, AMD must show material Helios revenue, acceptable margins, and cash collection without repeatedly increasing its financial support. Independent MI450 and Helios customers would strengthen the signal further because they would show that adoption is broader than one strategically linked buyer. The concern weakens if future disclosures show that AMD's equity investment is commercially separate, Anthropic pays on normal terms, and the deployments produce profitable revenue without additional support. The next near-term watchpoint is AMD's Advancing AI keynote on July 23rd, followed by its second quarter results call on August 4th, although that earnings report may not reveal the full economics of a 2027 deployment. The calm verdict is that this is a meaningful competitive win, but it is not yet proof of fully independent cash-generating demand. Price can celebrate the headline now. Deployment, margins, and cash will decide what the deal is really worth.